Did Phoenix officially see the bottom of the market? I know many of you aren't going to agree with this, but we're going to talk through the information today. So let's get into it. All right, so we have a lot going on this week, you guys. There's going to be some big economic news because we're going to be getting a jobs report on Friday, as well as Jerome Powell's going to be speaking. And so all of that always affects what's going on in the market. And why do we care? Because that affects mortgage interest rates, which affects demand, which affects the real estate market. So on Friday, we're going to be getting the February jobs report. It's expected to show 200,000 jobs were created last month. Now, if you remember, last month we got the jobs report that said a whopping 517,000 jobs were added to the economy, which blew away expectations. And there was a lot of talk around the fact that there was some noise in that report, and they estimate that it was supposed to be closer to about 350,000 in the January report. So be that as it may, we'll see what comes out on Friday with this jobs report. They're also talking about wage growth being a key focus of this report. Hourly earnings expected to rise 0.3% over the prior month and 4.7% over last year. And then also, I think there's a couple other factors in there as well that they're looking at. Then Jerome Powell is going to be speaking on Tuesday and Wednesday. So depending on what he's saying about inflation and the other economic factors going out there, that could definitely affect markets and then affect mortgage rates. So we'll see. We may see some fluctuation in rates this week. And again, this all is important because that then affects demand. So if you have your house on the market, you may see a drop off in the number of showings that you're having if rates go up significantly, or if they go down, it might spur a lot of activity. So that's why we like to pay attention to that. Now, speaking of mortgage rates, they are not in a good place right now. The U.S. housing market just took another hit. So this article is talking about rates. So already mortgage purchase applications, a leading indicator for home sales volumes, has started to fall again. So last week we actually saw the lowest number of mortgage purchase applications since 1995. So it's a 28-year low. That was not a good thing to hear in the mortgage industry. And they talk about how there was a brief revival in application activity in January when mortgage rates dropped down to 6.2%. But now there's been 3 straight weeks of declines in applications as mortgage rates have jumped 50 basis points over the past month. So rates are not getting better at this point. If you are a buyer and wanting to lock in your rate, definitely speak with your lender. They will have much more knowledge about where they may anticipate rates going and whether or not you should lock. And if you're a seller out there and you've seen a drop off in activity on your listing, it could very well be because these rates have been fluctuating so much and buyers who were a bit more interested or able to afford a little bit more, even a month ago, maybe holding off to see where rates go. So all very important things to pay attention to. So let's talk about the CMI. You guys, I was wrong. If you're new here, the CMI is the Cromford Market Index, and I follow the Cromford Report. They are local to Phoenix. They analyze all the data in the MLS for Phoenix housing and have been looking at it for over 20 years, looking back at trends and all of that good stuff. And I was talking about how I felt the CMI was going to start to come down because we were seeing these mortgage rates tick up. And so demand was probably going to start to go down, but I was wrong. So I'm going to show you here in a second. First, if this video is valuable at all, please hit that like button and consider subscribing if you're new so you can be part of our community here and keep up to date with what's going on in Phoenix real estate. Okay, the CMI is 129.4. We are almost at 130 on the CMI, which is surprising me because just didn't expect it to go this high. As we were creeping into the 120s, I definitely thought we were going to kind of hang out there for a while, but now we are creeping into the 130s. So we'll see what happens next week as rates continue to increase, or maybe not. We'll see what happens with rates. So the way to look at this, you guys, anything over 110 means that we are in a seller's market. And this is for the Phoenix metro area. And I know I get a lot of pushback every time I say the word seller's market. There's always someone who wants to argue about what a seller's market is. And all this means is that we have more demand than supply. And so sellers technically have the upper hand, even if it's by the slightest bit. Now, this varies city to city a little bit. It varies based on price range. And of course, it varies on the condition of the house. We're not in a market where you can just list a piece of crap for a high price and someone's going to take it. That was the CMI last year at 400 and something. We're not there, but we are technically in a seller's market. So as a buyer, you don't have all of the power any longer. And as a seller, you have a little bit more choice because you may get 2 offers instead of 1. Or, you may be listed for a while, but you will get an offer. We're not in a buyer's market where you're never going to get anything and you just have to continue to slash the prices. So that's where we stand. Demand at 82.8, so 100 being normal. That means demand is creeping up a little bit, only 18% below normal. And then supply is still pretty low, and that's what's keeping this CMI high. Supply is sitting about 36% below normal. And so without supply continuing to go up, and we keep having more demand, we're getting into a supply constrained situation. So that's why this CMI is reflecting a seller's market. Now let's look at it by city, because this is also something I was wrong about. I was thinking we'd see more red arrows this week, and we're not. These are all more green arrows with Chandler leading the charge here. And again, if you're new here, this is just by city. So these are the numbers, the CMI for each major city in the Phoenix area. And this is a change month over month. So altogether on average, the CMI is about up about 13% month over month, which is a pretty big change because we weren't seeing all that much for a while. Especially strong are Glendale, Gilbert, Peoria, Phoenix, Chandler, and Avondale. If you see all of them, they've had some pretty large increases in their CMI month over month. Those are all up over 20% from a month ago. So those are making the biggest gains. Anything with a green arrow means that it's good for a seller. A red arrow means bad for a seller. So that's how this is red. There's 3 cities in a buyer's market. So we can see these Buckeye, Maricopa, and Queen Creek, all cities that are a little bit more on the outskirts and also have a lot more new construction going on. And then we have about 12 in a seller's market and only 2 in a balanced market. So again, just kind of seeing that we have the majority in a seller's market that reflects the overall CMI of what's going on. So find that interesting, but here's the real interesting thing. The bottom of the market has been declared by the Cromford Report to be Q4 of 2022. And here's why. We have the contract ratio, and this contract ratio measures the number of active homes for sale versus how many are actually under contract. So it's a ratio, and it is very volatile because it's looking at actives versus under contract daily. So it's not seasonally adjusted, and we tend to see a lot of fluctuation in it because it's a little bit more raw than the CMI. It's also a little bit more timely than the CMI. So it just hit 60, which by their definition is officially a hot market again. So I'm going to read you exactly what the Cromford Report says about this, and you may have your own opinions, but I'm going to share directly from them. They're saying the contract ratio for all areas and types has risen above 60. This means we are officially in a hot market. You should therefore anticipate house prices to rise in the coming months, no matter what you read in the media, which tends to be based on their reports and projections on housing data that is 1 to several months out of date, such as the Case-Shiller Home Price Index. The opportunity to buy at the bottom of the correction occurred in the fourth quarter of 2022. Congrats if you bought when everyone else was fearful. That was good market timing. So bold prediction, bold statement by the Cromford Report saying we saw the bottom of this correction. Now, in my opinion, does this mean that things are only going up from here? No. I think maybe we can just go sideways for a bit. Maybe things will fluctuate a bit. And maybe things will go up. I don't know. But I don't think, in my opinion, the way I'm taking this, I don't believe that all of the bad is over with, right? There's a lot of volatility with mortgage rates, with markets, with the economy, with a recession. Although keep in mind, recession means rates go down, and rates go down means more buyers. And if we don't open up any supply, then we'll be in more of a seller's market. So, I don't know if this bottom truly means we only go up, right? We may just kind of be a little bit more kind of sideways, just a little bit more stable, cruising for a while, if you will. So, anyway, wanted to share that with you because I thought that was a pretty bold prediction by the Cromford Report talking about the contract ratio and where they believe that we stand with the market correction. So we also got the affidavits of value, which talk about what the sales were like in February compared to January. And I'm going to share these with you. We also look year over year. There were 5,910 closed sales, down 35% from February of 2022, but up 30% from January. So, year over year, we were down, of course, but month to month, we saw a lot more activity of closings in February, which makes sense because January became a very busy month. There were 1,208 new home sales, down only 5%. And that's from last year. There were 4,702 resales, which was down 40% from last year. Makes perfect sense. But the new home sales weren't down much at all. Monthly median sales price was $440,000, which is down 3.3% from February of 2022, but up from $439,000 from last month. So median sales price actually went up month to month between January and February of this year. The new home median sales price was $514,776, which is up 7.8% from February of 2022. So new home sales are actually up from last year in terms of prices, and the resale median was $420,000, which is down 6.7% from February of 2022, but unchanged from last month. So new homes are faring much better than resales, is what they're saying in terms of volume and in terms of pricing. So I know I'm getting a lot of comments from people about new construction supply, and I find this interesting because we see that the new home sales were only down 5% year over year. And then obviously they're looking much stronger in terms of the price. And I'm looking to find a little bit more information about the supply of new homes because that seems to be the comment, not only on this platform, but other platforms from anyone, as we talk about a seller's market, is that there is going to be a massive oversupply of new construction hitting the market this summer. Yet I can't find where this source is because no one can tell me where they're getting that information. So I am on the hunt to find out so I can hopefully share that with you guys in a future video. With that being said, I know there are a lot of permits, more than we've ever seen for multifamily and build to rent. And so I do know that that is going on. I just haven't heard that we have an oversupply of to be built inventory for single family homes, because I know builders were really pulling very few permits last year as things started to change. So I'll see what data I can uncover for that and share with you guys in a future video. Thank you guys for joining me on this Monday market update. I appreciate all of your support. If you have any questions, check the description below. I have a few helpful links there, whether you're a buyer or a seller, and you can also reach out to me for questions or set up a discovery call. I'll be back later this week with some more info. I'm Caitlin McKegg with the Desert Dreamers team.